Well, unfortunately, it's going to get worse before it gets better. That was the message from Federal Reserve Chairman Jerome Powell to a Senate committee today. He testified that rates could go up higher and faster depending on economic data. He said there is little sign of deflation on important services, and he added the Federal Reserve's goal is to return inflation to 2%, and more hikes are necessary in order to reach that goal. In 2022, the Fed's hiked rates 7 different times. And that is a story that everybody, we're kind of like, if you don't know the intricacies of our economic system, and there's not a lot of, normal people that do, I certainly don't understand it. But I know anytime when they talk raising interest rates, it's not a good thing for consumers typically.
And I'm like you, so I was trying to read up on this a little more today. And there is a key economic factor in this called the yield curve. And apparently it is a rate or an indicator of what is coming next. And we've been avoiding the word recession. A lot of people are saying, oh yeah, no, that's not going to happen. Well, we are in a yield curve inversion, as it's called, and that has never happened, well, not at these levels since 1981, which gives you an indication of where we're sitting. And on top of that, it has preceded every recession since 1955. So it's one of those key factors that people look at economically, all the finance guys, and say this does not look good. And it sounds as though what they're saying is long term, yeah, maybe we're going to be okay, but for shorter term, the shorter term economy, very nervous financial experts.
Well, and it's very tricky because they're still kind of moving these rates around. They're trying to do it very incrementally to slow things down a little bit as far as runaway inflation and whatnot. The jobs report came out. It was great for January. Consumer spending is still going.
Yes,
so technically we're not, it's not the recession. Everybody's like not completely slowing down, but there are a lot of indicators that are kind of hinting that direction more and more. It seems like more are getting on board.
Well, and the debt is also, they're talking about how credit card debt is higher than it's ever been. And that too could really cause some problems, obviously, because that credit card debt is where those interest rate rises really.
That's the key, absolutely.